Welcome to Daily Crypto, episode 32. Today, we're taking a deep dive into the latest in the crypto world. It's definitely been a very active period. We're seeing some pretty significant shifts, lots of news dominating the landscape that we really need to explore, especially how it all connects globally.
Yeah, it's been, well, quite volatile, but also, a range of fascinating, sometimes really surprising developments across the board. From the big coins everyone watches, right down to some smaller projects. A lot going on, and it really shows how tied into global events this whole space is.
Okay, let's unpack this then. The first thing that really jumps out is just the overall market performance. What are we seeing with the big players right now? Looks like, well, a lot of red on my screen.
You're absolutely right. It's pretty much a sea of red if you look at the latest figures. Widespread negative daily changes. Bitcoin, it's around $99,530, but down like 3.6%. Ethereum's taken a bigger hit, actually. It's at $2,186, down over 9%. That's quite significant. And it continues, BNB at $609, down about 3.7%. Solana, $130, down over 6%. XRP at $1.97, down almost 6%. Even the meme coins, Shiba Inu, Pepe, Bonk, Dog with Hat, Popcat, they're all down between, say, 5 and 8.5% roughly. So yeah, it's broad.
Wow, that is a lot of reds, not just one or two assets having a bad day. It feels pretty widespread. Obviously, corrections happen, but what's driving the specific widespread downturn? Is there a main cause we can point to?
Yeah, I mean, our analysis and what the headlines are saying points pretty directly towards geopolitical events being a major catalyst. You see things like geopolitical tensions cause crypto to crater, and more specifically, reports linking it directly to recent events like crypto market hit by $1 in liquidations after U.S. strikes Iran. And another one, crypto markets crash after U.S. bombs Iran. So the link is pretty explicit in the reporting. It shows just how sensitive crypto can be to that kind of real-world instability. We even saw the Dow Jones showing mixed performance amidst all this, so it's not just crypto feeling the pressure, though crypto's reaction was particularly sharp.
$1 billion in liquidations. Okay, that's a huge number. It sounds pretty dramatic.
hmm
For listeners maybe not totally up on the term, what exactly is a liquidation in this context? Why does $1 billion of it cause such a, well, crash?
Right. It's a really significant sign of market stress, acute stress. So in crypto trading, a lot of people use leverage, right? They borrow funds to make bigger bets. Now, when prices suddenly move sharply against those bets, the exchanges basically step in and automatically close the positions to stop bigger losses. That forced closing, that's the liquidation.
Oh, okay. Forced selling, essentially.
Exactly. So $1 billion in liquidations means positions worth that much were just forcibly sold off, often really fast during a sharp drop. This creates, well, a ton of selling pressure, adding a huge amount of supply suddenly onto the market, which just pushes prices down even faster. It's like a cascade. It signals a really rapid unwinding of those speculative leveraged bets. And yeah, significant losses for a lot of traders. What's really interesting, or maybe stark, is just how quickly these global political events translate into massive financial impacts in these digital markets. It's quite the reminder.
Yeah, it really underscores that connection. The world stage directly hitting digital assets. It definitely shows how interconnected it all is. You sort of wonder if crypto can ever really exist in its own bubble.
Seems less and less likely, doesn't it? At least for now. And speaking of connections, it's not just geopolitics hitting prices, it's also how governments and institutions are, dealing with crypto itself. Which brings us to some pretty big moves on the regulatory front and with institutional adoption. What's the latest picture there? Because we're seeing kind of different signals globally, right?
Yeah, it does feel like a bit of a mixed bag.
It really is. A fascinating duality, you could say. So on one side, you've got major economies looking at deeper integration. Japan's central bank, for example. Reports say they're seriously looking at crypto as a contender in their, quote, post-cash economy. Think about that. Not just accepting it, but seeing it as potentially integral to a future financial system, maybe even alongside or replacing physical cash eventually. That's a huge shift for a central bank.
Wow, yeah. From a major economy's central bank, that's definitely significant. What would that even look like practically if they went down that road? For people in Japan or even globally?
Well, practically, it could mean crypto becomes much more legitimate for everyday use, like seamlessly part of banking, maybe lower transaction costs. For citizens, potentially new ways to interact with the economy. And globally, it sets a massive precedent. Could definitely push other central banks to explore it, accelerating that mainstream adoption path. Could lead to a more, digitally native global finance system over time.
Okay, so that's one potential future.
Mm.
And then closer to home in the U.S.
Right. Another interesting sign. Texas is reportedly looking to add Bitcoin to its official reserves. Again, this is pretty big. A U.S. state considering Bitcoin not just as like a speculative thing, but as a strategic reserve asset, that lends a certain governmental legitimacy.
And then there's movement in Europe too, right?
Yeah.
With Coinbase.
Exactly. Coinbase, the big exchange, just secured a MiCA license in Luxembourg. MiCA, that's the Markets in Crypto Assets Regulation. It's the EU's big comprehensive framework for crypto. Really important because it creates a single, clear set of rules across all the member states. So Coinbase getting this license is a major step. It lets them operate under this harmonized system in a huge economic area that brings stability, clarity, good for users and businesses.
Okay, so Japan potentially embracing, Texas considering reserves, EU getting clearer rules via MiCA. That all sounds pretty positive for integration and clarity.
Yeah.
But like you said, it's a mixed bag. What's the other side of the coin?
Indeed. Contrast that with Norway. They've moved to ban new power-intensive crypto mining. And what's interesting is Norway has tons of clean, renewable energy, but the rationale seems to be about prioritizing that energy for other uses.
Even with clean energy.
Yeah. It highlights that even if the energy source is green, the sheer amount of energy mining uses can still be a regulatory sticking point for some governments. It's about energy demand priorities.
So it really is a mixed picture globally. Some places opening doors, others putting up fences. What does this patchwork approach mean for the crypto world overall? Someone trying to figure out where things are going.
Well, it creates this really complex global landscape, doesn't it? You've got regulatory clarity emerging, like in the EU with MiCA, which definitely attracts businesses looking for that stability. But then restrictions, like in Norway, might just push those mining operations elsewhere, maybe to places with fewer rules or different energy situations. It creates a sort of regulatory arbitrage.
So different rules in different places. Businesses might just move around.
Potentially, yeah. It suggests the future isn't one single global approach, but maybe this patchwork quilt of different regulations. And for anyone involved, users, investors, builders, it means you really have to understand the specific rules of the game in each region. It makes geography much more strategic than maybe people thought before in a decentralized world.
That's a really interesting take the patchwork future.
Yeah.
Okay, let's pivot a bit. Beyond the big price moves and the regulations, there were other headlines that caught our eye. Lots of innovations still happening, new challenges popping up too.
Absolutely. The ecosystem keeps evolving. Take the NFT market, for instance. We saw reports that NFT sales actually plunged quite a bit, down 18% to around $117 million recently. But interestingly, Polygon actually beat Ethereum in sales volume during that period.
Polygon overtook Ethereum in NFT volume. Why is that happening?
It likely points towards users and creators looking for, well, lower fees and faster transactions. Polygon offers that compared to Ethereum's mainnet right now. So it signals a market preference, at least in the NFT space, for better scalability.
Okay, so scalability is key. What about Ethereum itself then? Are there solutions being worked on?
Definitely. There's news that, quote, Alt-ZK solutions can save Ethereum. ZK stands for zero knowledge. These are technologies like ZK rollups designed to help Ethereum scale. They basically bundle up lots of transactions off the main chain and then submit a kind of cryptographic proof back to it. This massively cuts down fees and speeds things up. They're seen as pretty crucial for Ethereum's future, allowing it to handle more activity. So yeah, fundamental tech development is ongoing.
Good to hear the core tech is still improving. What about how people interact with this stuff? User identity seems to be a hot topic.
It is, and there was this headline, Reddit considers World ID iris scan so users can prove they're human. World ID, it's a digital identity system. It uses iris scans, yes, scanning your eye with a special device called an orb to verify you're a unique, real person.
Wow, iris scans on Reddit.
Well, they're considering it. The idea is to fight bots and fake accounts online. It shows this growing interest, especially from big platforms like Reddit, in finding robust ways to prove identity in the Web3 world. It's definitely a provocative approach. Raises some questions for sure.
Yeah, definitely raises privacy questions versus verification needs. Interesting tension there. Okay, shifting gears again. What about the money side? Venture capital. Given the shaky market, are they still investing?
They are actually. Despite the market being wobbly, one report highlighted 159 meters in crypto VC funding, specifically going into crypto infra and AI. So VCs are still putting capital to work, but maybe more strategically, focusing on that foundational infrastructure, the tools and rails the whole system runs on. And AI, well, that's obviously huge everywhere, including its intersection with blockchain. It shows that the smart money is still betting on the long-term potential, on the core tech, even if maybe the more speculative hype has cooled off a bit.
Makes sense. Investing in the plumbing. And speaking of core tech, back to Ethereum. What's this about staked ETH?
Right, another significant data point. Staked ETH eclipses 35 meters. That means over 35 million Ether tokens are locked up, or staked, by users to help secure the network and earn rewards.
35 million ETH. That's a lot. What does that imply?
It implies a few things. One, it shows pretty strong long-term conviction in Ethereum from a large base of holders. They're not just trading, they're participating. Two, when you lock up that much of the supply, it reduces the amount readily available to be bought or sold, the circulating supply. This can lead to what's called a supply squeeze, which, if demand stays strong or grows, could potentially push the price up. So it's seen as a healthy sign for the network security and potentially bullish for the price.
Okay, strong commitment there. But not everything is smooth sailing, right? There was something about Pump.Fun.
Yeah, an example of platform challenges. Pump.Fun's $4 token launch postponed again amid legal woes. Pump.Fun is it's a platform that makes it super easy for anyone to launch a new token. But this postponement, because of legal issues, just highlights the regulatory hurdles and potential problems platforms face, especially when dealing with token creation and making sure everything's compliant, shows that innovation can hit roadblocks.
Right, so pulling all these different threads together,
Mhm.
the market swings, the regulations, the NFT shifts, the tech upgrades, the VC focus, the legal issues. What does it all mean for, say, the everyday user? Or someone just trying to get their head around this whole space? It feels like a lot of moving parts, sometimes pointing in different directions.
It really is a lot to track. But I think if you zoom out a bit, what's striking is that even with those big market downturns and the geopolitical shocks we started with, all this other stuff, the innovation, the institutional moves, the regulatory work, it just keeps going. It points to something deeper happening, right? An
Yeah.
underlying development. It's not just about price speculation anymore. People are building foundational tech. Governments are creating frameworks. Serious money is investing in infrastructure. So yeah, the ecosystem seems to be maturing even while it's getting hit by these external storms. It kind of suggests the long-term direction for these technologies might still be upwards, even if the short-term path is, well, pretty bumpy.
That's a good way to frame it.
Okay.
Okay, to wrap up the news section, let's quickly hit some specific coin updates or narratives that are floating around.
Sure. Quick hits. Shiba Inu, despite its recent price drop, some technical analysis suggests it might be slowly forming a bullish pattern. So potential for a comeback there, maybe. For XRP holders, a bit of reassurance, perhaps. A Ripple lawyer dismissed claims about government seizure, saying XRP is safe for now, addressing some FUD there.
Okay. Any others getting attention?
Yeah, a few highlighted as top cryptocurrencies to watch recently were Axelar, Pi Network, and Solana. Suggest they have interesting developments or market dynamics people are keeping an eye on. And then there's the Michael Saylor effect. His company, MicroStrategy, buying another $1.08 billion worth of Bitcoin.
Wow, over $1 billion more Bitcoin.
Yep. Saylor's known for his huge Bitcoin conviction, and buys like this are often seen as a strong institutional signal. It tells the market that major players are still accumulating, despite volatility. It certainly gets people talking about which other tokens might benefit from that kind of confidence.
Definitely a bold move. What about new coins? Always seems to be new stuff popping up.
Always. Yeah, we're seeing that consistent trend of new pre-sales, new altcoins being hyped. Headlines mention names like Neopep Bitcoin, XYZverse, BlockDeg, often framing them as having high potential. We don't endorse specifics, of course, but shows there's this constant churn of new projects entering the space, trying to innovate or capture attention. The appetite for the next big thing is still very much there.
And finally, anything on the macro front, like from the Fed?
Just a mention of a surprise Fed statement sparking some hope for a Bitcoin and altcoin rally. It's just a reminder that any signals from central banks about, interest rates or monetary policy can really sway sentiment across all markets, crypto included. Macroeconomics still casts a long shadow.
Okay, great overview. It's really clear there's always something bubbling under the surface, even when the overall market feels a bit subdued or chaotic. So, just to recap this deep dive, we've seen the immediate, quite powerful impact of geopolitics on crypto prices. We've seen this really interesting contrast globally, some places regulating and adopting, others restricting, and underlying it all, constant innovation across different projects and infrastructure. It's definitely a dynamic space.
Absolutely. And what's fascinating is seeing that resilience, that persistent development, even with all the turbulence. It really makes you think. And maybe here's a thought for you, our listener, to mull over. We see how fast global events and these different regulatory decisions can shake up the crypto market. So, what role do you think global stability or maybe even instability actually plays in the bigger picture, in the widespread adoption and the future stability of decentralized finance? Is it a catalyst? Is it a roadblock? Or maybe something more complex?
That's a really interesting question to ponder. A great place to leave it for today. Thanks everyone for joining us on this deep dive. Definitely keep exploring these topics and stay informed. We'll catch you next time.